Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Friday, October 31st. That's Halloween here in the United States. And my name is Raleigh White, and I'm coming to you live from some really creepy woods outside of Austin, Texas. And I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, including his analysis of the current market actions. He's also going to share the top stocks that are on his watch list for this afternoon. He's going to give us a review on time spreads and when to use them. He's also going to share option plays, including debit and credit spreads. And then he's going to give us a special education session on implied volatility and then answer some of the pressing questions from this week's mailbag, including, hey, Roger, what indicators do you put on your daily and intraday charts? Also, why do you avoid using stops when placing swing trades? When is the stock overextended? And, why do you just use market internals for day trading, or do you use them for other reasons? Those are some of the key things, that came in the mailbag. So once again, a terrific session for today, Friday, the 31st of October. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we do have some ground rules. Always be kind and supportive in your postings. Please keep to the topics. No political discussions allowed whatsoever. And also, folks, keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger's sharing, because after all, he's taking time out of his day to help give us an edge and to help us become more confident and consistent in our trading activities. Now, for those of you that joined us this morning at 8 o'clock Eastern Time for Roger's pre-market open, you note that there were several key catalysts we had to be aware of today. On the technology front, Apple was up 1%, Amazon was up a whopping 12%, and WDC was up 12% coming into the open. We also noted that in the consumer sector, Netflix was up 2%. On the healthcare front, we knew that ABBV was going to be issuing their earnings before market open. BMO stands for before market open. On the energy front, we saw that Chevron, Texaco, and ExxonMobil also were scheduled to release their earnings before market open. Other catalysts included Asia, while China was down on profit taking from its recent highs, and Japan continued to grow higher based on investments in artificial intelligence. On the Fed front, we do have a couple of FOMC members that are speaking today, and those speeches could be pretty telling. And we were scheduled to have some personal income and some employment data today, but we're not seeing that information due to the government shutdown. Now, for those of you that are wondering, what are these catalysts all about and why do we even focus on them? Well, folks, the key thing is this. We're focused on critical information that is either known or will be known during the trading session, but may not yet be priced into the markets. And for those reasons, we need to pay attention to it. Now, on the small cap front, Roger came up with four tickers today. MNOV at $2.60, GETY at $3.73, CTM above 162, and DFSC above $9. And let me switch the screens here and let's just take a look at how these tickers are doing today. So far this morning. Folks, you see 8 charts up here. The ones we want to focus on are the ones over here to the right. Here we see MNOV. We can see the pre-market high was $2.60. It's currently trading at 134. It doesn't look like it's even going to sniff this level. If we look at Getty, the pre-market high was $3.73. It's been falling off since the open. It's now trading at 210. Does not appear that it's going to want to come up and pierce and move higher than this level. In the lower section here, we have CTM. Its pre-market high was 162, and we can see that it is only trading at 126. So it's hard to feel like it's going to come in this area. And then lastly, DFSC, we can see it here at $5.15. Its pre-market high was $9. So it's got a long way to go before getting here. So I don't think we're going to see any, action on the small caps. If you're wondering what these other charts are, this is the SPY. And this is the E-mini S&P. And I put these two together because a number of people, in AlphaZone Pro, for example, they're always interested about, how can I trade the futures? How similar is it to the SPY? And you can see it's in lockstep. It moves identically to one another. Down here, we have bonds and the QQQ. But anyway, on the small cap front, no activity there whatsoever. So let's go back to the regular presentation. And the other thing I want to share about these small caps, Roger's decision as to which one to focus on is based on overnight price action, but primarily extreme pre-market volume. I'm talking about 100 times what the normal volume is for these small cap stocks. And if these are attractive, please only consider trading them during regular market hours and look for a fill before 2 p.m. Anything after 2 p.m. is going to be pretty darn risky. And if you ever get into any of these trades, please do not hold them overnight. So once again, Roger gives a lot of signals, and I've got some stats on those, and we've got over 200 signals that he's given since I've been tracking these in early August, and about 18% of them hit. And of the 18% that hit, about 75% are profitable. So that's how all that tracks. But more on that to come in a little bit. But that's the activity on small caps. Now, when it comes to the large caps, this was Roger's pre-market stock selection from this morning. We can see that there were 10 shorts that he identified for us, and we see them all here. And he also identified 10 longs. And there's something I want to point out about them. If you look at WELL, you note there's an asterisk there. That means that was a pretty good looking A line set up for you to take advantage of. And the other thing was this: on STX, you see two asterisks, and on snow, you see two asterisks. Once again, he said these are good looking, but they are tech stocks. And oh, by the way, they are overextended. So be careful. Now, when Roger talks about stocks that are on his watch list, these are stocks that he's got a sharp eye on. And as a matter of fact, in each one of them, he knows exactly what the setup is and what the levels are that he wants them to achieve before he considers them as an active trade. And once those levels or triggers are hit, from his perspective, more than likely they're going to end up being posted in the trading pit or on one of his other services. Now, as far as pre-market comments are concerned, we did note that the NASDAQ was rallying way hard coming into the open. The NASDAQ futures were up almost nearly 400 points. Okay. And that was all being driven by Amazon and Apple earnings. We did also note, though, that the Dow and the QQE and the RSP, these are the equal weighted stocks. In other words, it's the QQQ less the MAG 7, and it's the SPY less the MAG 7. These equal weighted stocks, they were lagging. They were not moving with the rest of with the MAGs. He also noted that bonds were moving lower and that VIX was bottoming out at lows. And he's expecting that VIX is going to start bouncing up. He also noted that stocks below 20 and 90-day highs were rapidly increasing. As a matter of fact, I wrote these down. The number of stocks making 98 highs, 20-day highs on Monday was 376. Today, it was 89. So we're talking about the number of stocks making 20-day highs. As far as the lows are concerned, stocks making lows, 20-day lows, went from 63 on Monday to 233 today. And that same ratio held for stocks at the 90-day level. So once again, Roger, he doesn't like what he sees, and I love it when he says this, he smells a rat. So from his perspective, his advice to people today, don't do anything for the first 60 minutes of the trading session and keep a sharp eye on the mags for signs as to if this trend is going to continue or if we're going to see some adjustments today. Now, today's agenda, once again, great agenda. Roger's going to give us an analysis of the current market actions. He's also going to share the top stocks that are on his watch list for this afternoon. He's going to review time spreads and when to use them. He's going to give us some options plays, including debit and credit spreads. He's going to give us a special education session on implied volatility, and he's going to dip into this week's mailbag to answer any questions that are lingering. And with that, folks, we're so happy to have you here with us. And let's go ahead and say hi to Roger. Let's say hi to Matt. Look at Matt, Farmer Matt.
Love it.
Yeah, Roger. I had to go with the creepy woods background. Those are some woods outside of Austin. That was a midnight shot.
I
And
love it.
happy Halloween.
Happy Halloween to you too. Happy Halloween to you too. I think the room is a little bit light. We have some folks finishing up some classes that are going to be done in about 10 minutes. But just wanted to say hello to everybody. This is my first time broadcasting from the new office.
Oh, that's right. You're in your new digs.
I am in the new dig, so you're going to have to tell me how I sound because I've never broadcasted from here before. Is the sound loud? Is it good? Does it sound like it always does?
It sounds like it always does. It sounds great.
All right. All right. Good. 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 Just
And
want
we
to make
got the
sure
palm
that
trees in the background, so we got the it always looks like, I'm trying to think, the Mexican beer commercial.
yeah, the
It's
The Corona beer.
Corona commercial.
Right.
Yeah.
It does. You're right. It does look the Corona. You know what's great is the ceiling is lower, and I'm able to use just the ceiling lights to get this video. I don't have to use all these big lights. So as a result of that, we have a lot less heat. And
Okay.
as a result
Yeah.
of less heat, yeah, I'm a happier Roger. So it's very very good. But I got to say, this new office is pretty good. It's a lot more officey than the other office. The other office was more like a standalone building where we had our own building and the bathrooms were inside. This is inside of a building. I think this used to be the old Merrill Lynch or Morgan Stanley or do you know, Matt, if this was the old Morgan Stanley office?
I have no idea.
Yeah, someone mentioned to me this was like the old Morgan Stanley or whatnot office.
Oh
But I'm glad
man, if the walls could talk.
if the walls could talk. Yeah, 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 yeah. If the walls could talk, that would be something else. I hope everybody's having a great day so far. I hope everybody's good. I could actually share several screens with you now that I have all my screens back, and Matt did a fantastic job of setting everything up. Now, I got a lot of questions in my mailbag. A lot of questions in my mailbag, and so the first thing I'm going to do is I'm going to do some market analysis for you. Then I'm going to go through my stocks, and then I'm going to get into the mailbag. And the mailbag includes a lot of the questions that you guys have been asking me about time spreads, about overextended stocks, and all of those other things. So we're going to cover all that today.
Man, that's great, Raj.
And then, if you guys behave yourselves, we'll do a class that I was asked to do due to popular demand. That the same one that Raleigh and I did last Saturday, which was fantastic.
That sounds good. Well, Roger, just to kick things off, I thought that your session this morning was extremely eye-opening, and it's for reasons I know you're going to share again. But it's like there's two realities going on here. That's or one reality and one surreality. The surreality is where we think the market is. It feels like it's boisterous, it's topping, it's moving. But when you showed what the equal weighted stocks were doing, and then you shared, initially what stocks were at highs, what were lows, it is frighteningly eye-opening, how propped up the markets are at this time. And I'm
Yes.
not like Chicken Little saying the sky is falling, but I think you're spot on with regard to your concerns about the fact that, we're setting up for what might be a retracement, not a crash, but a retracement that would be healthy.
Yes, and again, in some very specific sectors, in some very
Yes.
specific, and that's the thing that a lot of folks, you see, the problem is this, Raleigh. And again, I understand people come in, they go out, they listen, but if you're going to comment, then please make sure that you hear everything, because I am very specific in what I say, and I was very, very specific in what I said this morning. And just so I'm gonna say this again for folks who are here right now. Let me just turn on my TC 2000 for the first time since we've been here. Again, I'm still kind of getting situated and all. This is literally my first time here at this office. I've never worked here before, but it's a good start. I like what I'm seeing. Okay, so let me just take my TC 2000. So right here, let's focus right here. This is the SPY, okay? If you look at the SPY doesn't look bad at all.
Roger, we're just seeing you at this point in
Oh,
time.
oh, oh, sorry about that. Let me share my screen. I need to share my screen. All right. This is number 5. Lucky 5. Okay. Okay. Can you now see my
Yes.
uh you
Got
could
you
see
covered. Yep.
okay, cool. All right. All right. Delete that line. Okay. So you could see where the SPY is. And the SPY is just coming towards the 8-day EMA and the 15. And I think there's a lot of support right here. And that happens to be, by the time this gets here, if it gets here, this and this line are going to be pretty much aligned. So all I'm thinking at this point is either the SPY is going to hit the 8-day EMA or the 15-day EMA,
Okay.
which we're talking about that's not a big downside move, is it?
Mm-mm.
That's
Not if you
just
look, not you look to your left, you can see it's not. Yeah.
no, no, not at all. I mean, we're talking about erasing a weeks of data. So the sky's not falling, and I never said it was. I also I was also very, very clear on a couple of other things. And this morning, again, I'm just logging in for the first time to a lot of different things. But bear with me. This is our first time in this office. Okay. I also said that if you look at market momentum, 40% of stocks are at the 50-day and 54 at 200. And I said something very important, and I hope you guys didn't miss it. I said, we're not at 90 going to 50. We're already there. We're already there. You just can't see it because you're looking at this. Which, by the way, we're no longer up here, are we?
No, we're not.
Okay. But I said something else. I said, if you look at RSP, oh, do you guys see that line that I drew for you?
Mm-hmm.
Does it look to you? Does it look to you like it has a lot more to go? Doesn't it look to you like we're right there?
We're right there. Yeah.
We're right there, aren't we? We're like right there. So did I really say I'm bearish on the market? I think we're topping. No, I didn't say any of that. I said that mags are overextended. I said SMH was overextended. I said it needs to come down to this area right here. Until it does, QQQ is going to appear overextended, which, by the way, where's my, oh, here it is. Okay. Now, if you take away the mags and you just look at the QQQE, look at how close we are to it.
Mm-hmm.
I said all these things this morning, by the way.
Mm-hmm.
And I showed you all of these things these mornings. As a matter of fact, I drew this line this morning. if you want to get specific, or yesterday, but so folks, before you send me an email and say, why are we long if you think we're going to go, no, 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 please take what I say in context. And I'm really, really specific when I say things. Okay. Now this morning I drew a Picasso for you. I haven't done that in a while.
Yeah.
The Picasso has a line, and the line isn't here, is it? It's right here. It's right there. Let's just see how the market's looking right now. Okay, that's when I drew it for you. And this is where we're at right now.
Mm-hmm.
And my Picasso says that we're going to come and touch this line, right?
Mm-hmm.
It doesn't say we're going to fall down to the 200-day moving average, does it?
Nope.
So take it easy, all of you folks who have selective 2020 hindsight. Okay, please, it doesn't work this way. So I think we're going to come down here and we're going to base and we're going to see what happens next. That's all. That's all. That's it. That's it. So for that reason, I'm being very, very cautious with mega caps and initiating longer stocks in the technology sector. It doesn't mean I'm not going to trade. It doesn't mean I'm not going to do anything. It just means that I'm really cautious about what I'm going to do. And before I go buying a stock like NVIDIA or Tesla or Applied Materials, I'm going to think twice. That's all I said. That's all I said. Please don't take what I say out of context. Now, I haven't opened up the chat. I just want to open up the chat and say hello to everybody. NASDAQ slowly edging down. Must be Friday afternoon. Hey, Ralph. Good morning, everybody, or good afternoon, everybody. We got Robert, Candy, Joel, Kyle. We got Stacy. We got John. We got Iber, Finn, Adam. Hey, Adam. Tim, Jill, Murray. Yeah, Matt, the chicken must love you. Michael, David, Sally, Ken, Bob. Good. Bob made 496 on that guild. I'll talk about that in a minute. Yep, same beach. Different new office, same beach, everybody. Thank you, guys. All right. Everybody's hearing this. So I want to make sure you guys are actually hearing me, seeing me, and understanding exactly what I'm saying. Okay? All right. Doug says if Max 7 drop. Well, I kind of answered that question. I said that the RSP has been dropping for 1, 2, 3, 4, 5, 6 days now. Okay. So the only reason the mags are up is because earnings have on them, and they're not up anymore. They're coming down. Now they are not up. They're not here anymore. They're already here. They need to come down here. That's all they need to do. That's all they need to do. So we're not talking about a catastrophe. We're not talking about now your predictions of that we going to come down is correct. So why don't you short buy the put spot? Because we're not. That's a great question. 918-740-283. It was so much nicer if you could use your actual name. But the reason I don't go short is because we haven't broken any technical violations. And that would mean breaking the 50-day moving average. Institutions don't sell stocks till we start breaking the 50 or the 200. Folks, can you summarize? Can you tell Mr. 918-740-2833 what we do and what my job, my only job here is? Hey, Peter, what's my job here, folks? What's my job? To follow what kind of money? What kind of job? What do I do? What's the only thing I do? I follow what kind of money? And what is smart money? Institutional money.
Yep.
Thank you. So are institutions selling right now? No, they're not. No. Once we start coming here, or here, institutions are going to start selling. We don't try to pick tops and bottoms. We follow institutions. Hopefully you understood what I just said, and hopefully you actually listened to me. And also, I'm not expecting a major meltdown. I said they're overextended. I didn't say that stocks are ready to go down. Folks, you have to listen really carefully to the words that come out of my mouth. Okay? There's a secret to all of this. You have to really, really be right. Okay. All right. Sean says, I thought he was referring to Trading Zone. He didn't specify what he was referring to, Sean. Okay. Trading Zone's a whole different world. We're talking about daily. I don't know if you guys realize or not, but every ounce of analysis that I did in the last 15 minutes involved daily charts. Folks, do we use Trading Zone Live? Do we use daily charts in Trading Zone Live?
Nope.
Have you ever once seen me use Trading Zone daily charts in Trading Zone Live? No. then why would I be talking about Trading Zone Live, Sean? It's real simple. All you have to do is actually listen and pay attention. I am extremely consistent. Okay. And that's actually another mailback question we're going to have. Okay, so unless there's any other questions, and please, a lot of the questions you guys asked are answered every single day on YouTube. Every single day. You really, really have to pay attention to what I say. Okay? I mean, I literally just got done explaining why I'm not going short, and somebody asked me, "Why aren't you going short this? Why aren't you going short?" If I finished explaining it. All right. So what I'm going to do right now is I'm going to show you some stocks that I like to the short side and to the long side. Okay. That's a nice short right here. Earnings already happened. All right. Want to go about. So this is my first short. Y W W Y right here. 24 puts right here. BX. BX. And in this case, it's not overextended. We're looking at about 21 to 28 days out, somewhere in this vicinity. Somewhere in this vicinity right here. 155. Okay? Yep. Okay. Flute, also not overextended. Not overextended. There was something that was really overextended that I wanted to show you. Find it. Okay. So this is not overextended, okay? I'll show you what's overextended right now. So in this case, you'd go about 21 days out. There's actually a lot of meat here, but that's too expensive. So you would do a spread. You can go right here, buy the 230 and sell the 220. Make sure you do this for less than $5, okay? I don't look at how much money it has lost or gained, Chris, and how much time. I look at how it looks in comparison to the average. For example, what you're missing in this picture, Chris, look what Chris just wrote. Don't do what Chris is doing right now. It's a big mistake. Look what there's a great lesson here. Okay, guys, look what Chris just wrote. Nearly 10 points in 10 days. Isn't that overextended? Look at the ATR. What's the ATR? Do you see it? It's right here. The stock moves $6.64 per day on average. So it's 10 points. 10 points from a day. No, so 10 points from 10 days, not overextended. No. The fact that it moved that much, it has to get beyond this level. The fact that this stock moves $6.64 per day, $10 is not that overextended. It's just not. It's not. You want to see something overextended? I'll show you overextended. This is overextended. Capiche? Don't look at how much it's lost from the 10-day. Look at how it looks on the chart. And then look at its ATR. That's overextended. All right. Again, I'm not trying to be tough on anybody. I'm just trying to teach you guys. TU. Yeah. Again, please don't take what I say personally in any way. This is edumacation. This actually has really good intrinsic. The stock actually is priced very well. TU, 34 cents is intrinsic. It's not overextended. It's just grinding down. That's all. Urban Legend. Wasn't there a store called Urban Legend or a movie or something like that? Or am I mistaken?
Urban Outfitters.
Urban Outfitters. There you go. There you go. See how old I am? I don't even remember these things or know these things. Urban Outfitters.
Urban
Ur-
Cowboy.
Urban Cowboy. Oh my God. You're taking us to a whole different
No, that wasn't me. I tell you, I'm just
that was 1981. That was 1981, Urban Cowboy, 1981. Wasn't that with John Travolta?
yes,
Yeah, that
yes.
was fantastic. What a great movie. I was 11 years old. Hey John. Hey Don. You know what I'm gonna do, Raleigh, this weekend? I'm gonna
You're gonna
watch that
rewatch
movie. That is such a
that?
great movie. That is such a great movie. Really a good movie, a classic. Classic movie. My wife always loves it when I put on classic. She doesn't like all the new stuff. It's too politically correct. She likes the old movies. Urban Outfitters, about 28, 21 days out. You got plenty of time. You don't need to do a spread. About 72, 72. I do it every day, Greg, here at work. 72, 72 put right here. 72 put, 67 strike price, 72 delta right here. This is where you want to be right here. Okay. I try to do it every day. Kimberly Clark, and I actually highlighted the stock for myself because it's an A line. That is an A line. I'd prefer to see it close here today, but if this stock gives up the ghost and starts heading down here, that would be a very attractive A line stock. Okay. All right. 21 days out, 71 delta, or 28 days out, 68 delta. They're both pretty spready, just FYI. But that's you too, Catherine. Happy Halloween to you too. But that's kind of what I would be looking at. Okay. Okay, let's look at our longs. Does anyone have any questions about our shorts? Thank God we're wearing our shorts. It's Halloween. Matt, you really do look like a farmer. You guys want to hear something funny about Matt's get up on today? That is not a Halloween costume. That's actually his I'm
Went
not
to the closet.
you just that I'm not kidding. That's his wear. That's his wear. I'm not kidding. I'm serious. I'm serious. There was a trader, Matt. His name was Mark Cook. Mark Cook. He won the U.S. Investment Championship. He recently died. He was a real big guy, and he used to wear overalls, and he was a farmer. And he used to manually add up the tick throughout the day to see how far they would go, to see how overextended the market was, to see if he can buy calls and puts. But his name was Mark Cook. I subscribed to two services in my life. This is back in the not 80s, excuse me, 90s, early 90s, like early 90s. I subscribed to two services in my life, and he was one of them. Mark Cook, I remember. I remember. Learned a lot from him. Learned a lot from him. Mostly what not to do, but I did learn a lot from him. But you remind me of him because even though he was already like in his 40s when he was doing that, but the overalls, that's what he used to trade it with. He used to always trade with, they were like his lucky overalls. So when I saw you today, I first thing I thought about was Mark Cook, LVS. Okay, this is a long, okay? Look how well, okay, look at this. It gaps up and then it yeah, there you go, Jill. And then it just flags. That's good. It doesn't come off. That's good. That's a nice compression. I'd like to see it actually break this compression, but it's not overextended. This is starting to get overextended. This is overextended. This is getting overextended. This is in range. Okay. Let's go to calls now. 28 days out, you can go to 60, go to right here. 28 days out, 71 delta, 55 calls. It's spready. These are spready. They're spread. By the way, things are unusually more spreadier than usual. In this case, due to 67 delta, it's tighter. I think it's because market makers are just really concerned about the market right now. Hood, hood. That is a very nice looking setup right now, actually. Earnings in a few days. Folks, earnings in a few days. Big time, Dave. Earnings in a few days. Let me put it here on my radar. Okay. It's good to be back in the office. Yeah, I would day trade it right now, but let's see. Monday's going to be the third, right, Matt? Yeah, I'm not going to.
Yes. Yep.
Yeah, I'm not going to touch it. I'm not going to touch it. Too dangerous. Too dangerous for my own good. Um, 21 days to go, 70 delta, 16s. These are expensive, so I'm going to give you some shorter. I'm going to give you some shorter term options, and don't hold this into earnings, please. You can go right here. You can go. You can buy the 149s, and you could sell the 150s, and you could do this for about 50 cents. Okay. You too, Adam. See you later, Eagle Beagle. Have a good one. Okay. Let's continue. FSL, First Solar. Only if you're a day trader. Only if you're a day trader. Do not. And I'm going to talk about why this is okay for day trading and not in just a few minutes. I got that in my mailbag. So, but I may do this for a lotto trade, which means it expires today. Matt loves lotto trades. 260. You can buy the 265 and sell the 267.50. You could do this for about $125. And if this thing rallies, that'll be money. But that's a lotto. It expires today. That's a make it or a break it trade. TMO. That is a nice A line right there. I like this stock. I'm going to put it on my radar. Very nice. Hit the 15-day, supporting the level right here. I like this. I like this. Yeah, it could be good in the future, Cyrus. 21 days out. 21. Sorry about that. I'll go about 21 days out. I would go to the 71 delta. Too spready. Everything is spready. This is why we're having problems with time spreads. Everything is spready this week. Yeah, too spready. Way too spready. Way too spready. Forget it. Just way too spready. Even 14 days is spready. Just not a good basket. Right. No, it's more of a liquidity warning. It's not a meltdown warning. It's a liquidity warning. Okay, nice. Very, very nice. Very, very nice. Again, very similar to TMO. Right here, you can go 21 days out. You can buy the 145 and you could sell the 150. You could do this for about $2.50. Yeah, let's not jump to any big conclusions yet, okay? That's how you miss good trading opportunities, by jumping to conclusions and assuming things that are there that are not there. I know a guy, okay? Let me tell you a story, Raleigh. You want to hear this? It's a crazy
I
story.
love it. Where you say, I
Crazy
know a
story.
guy.
This is a crazy story. True story. I know this accountant, the CPA who lives in Los Angeles. I've known him since I've known him for 30 years. Nice guy, not a friend, just an acquaintance. Um, anyway, I'm not going to get into how I met him. That's a whole different story. But um, he thought he thought he thought he was really, really smart. Okay, and he had a house, and he thought that he was going to predict the next market drop. Okay, and he sold his house about 10 years ago. Okay, and he moved into an apartment, and the idea was I'm gonna sell my house. I'm gonna cash out for $2 million. This is Los Angeles 10 years ago. That's not expensive in LA. And then I'm gonna buy my old house back, or a similar house, not that house, but a similar house, for $1 million or whatever, after a crash, because LA really does fluctuate that much. Well, let me tell you how the story ended for him. He's still living in the apartment. His wife is ready to divorce his ass because she thinks he's an idiot. That house that was worth $2 million is now worth $4 million, and he's basically lost half of his net worth. Okay, So that's what happens when you try to predict and anticipate. You miss good opportunities. So don't lock yourself into a position. Don't do that. Be nimble, be flexible. Go with the flow. If you're having a hard time if you're having a hard time doing that, you're going to have a hard time learning how to trade properly because you have to pivot when you trade.
Yeah. And never push all your chips in the middle. I mean,
Exactly.
seriously.
Exactly. Exactly.
All right.
Yeah, he was an idiot. He was an idiot. He was he was one of those guys. I saw him in Vegas once. He was one of those guys. He would, they started in the roulette tables putting those how many times red hit, black hit. The guy would have a notebook and he would start writing it down, trying to create a system. I mean, like that's yeah, exactly. Yeah, trying to. Anyways, there's some people out there, Don't there's some people out there. Okay. So just wanted to share a story with you. But my point is don't lock yourself in. I see that people doing that all the time. It's gonna go up, the market's gonna go up, the market's gonna go up, or the market's gonna go down, the market's gonna go down, and then the market goes sideways. And you're like, shoot, I missed all these opportunities. Don't lock yourself in. G- don't lock yourself in to be really flexible. Think like a cat. My cats could get in and out of everything. They're very nimble. Think nimbleness. All right. What? Always assume everything you think you're wrong. Seriously, seriously. I do. 20 no, too spready, way too spready. Micron. Micron looks like it's a stock that Matt would absolutely almost love to buy right now. Am I wrong, Matt?
Almost.
Do I know my people or what? As soon as this baby hits right here and starts consolidating, I know two people that are going to buy it. One, his name is Matt, and the other guy, his name is Richard. I don't know if Richard's here, but if you're here, Richard, confirm that I'm not crazy. Right here. Right there. Right there. Right there. That would be a pullback A line.
And Richard is here.
Oh, there he is. Hey,
Yeah.
Richard, am I right? Are you gonna buy this when it hits when it consolidates, hits here and starts outperforming the market? Tell us. I'm curious. Yeah, very athletic, Murray. Very athletic. All right. So I'm not going to give you this one yet because it's not ready. But if the prices are right on the options, you see, there you go. Usually the prices are right on these options. Actually, let me see. These are very liquid. I would be shocked if these were not good. They're good. Okay. Cisco. Cisco's not overextended. It's actually really strong today, relatively speaking, of course. Go about 21 days out. 73 delta. 71 calls. November 21st expiration. APH. Not bad. Not a bad look. Not a bad look. 21 days to go. 67 delta, 135 calls. Richard says, I have seen many today with at least $1 spread. Yeah, just not a lot of liquidity. This is why we've been having problems with time spreads this week. We've never had mass problems with time spreads before, ever. We always have one or two, but this week it's like, I would say 40, 50, 60%. But then all of a sudden I started complaining and then I got like 10 testimonials on Guild. So I don't know. All right. So that's my longs. Okay, now let me get my list out. I have an agenda and I have a list, and I'm not afraid to use it. Just give me 1 second, folks. Give me 1 second. So just to summarize, for anybody who's just coming in here right now, here's the SPY. The SPY came off look at where we came off and started bouncing here. Okay. How close did it come? Pretty close, but it's bouncing. If this is the low, and there's a good chance it will be the low, and I'm pretty sure I can convince Matt to take a long if we get above the VWAP. Am I right?
Hmm.
Hmm?
If it holds after lunch.
Yeah. Well, I'm sure if it gets here, I think it's going to take the entire lunch, if you know what I'm saying.
Yeah.
Yeah, if it gets here. These are all big ifs. There's a lot of ifs in this equation, okay? But I like what I'm seeing here. And again, my Picasso, this is what I drew for you guys uh, at 11:16 in the morning when we were up here. We're now down here. Let's see if this holds or makes a new low. If it comes down here, we're at that's the eight. This is where I said we were going to go, and this is where we went. So I was off by half a point. It happens. Okay. I can't take you seriously when that Farmer John look, Matt. I just can't take you seriously. That every time I look at him, I'm like, oh my God. Okay, so my mailbag. I got some great questions. Here's what I'm going to talk about, and I'm glad you guys are tuning in. Yeah, we could still get there. We could still get there. So what? Okay, so I'm going to talk. I'm going to answer several questions for you. Okay. What indicator do I put on my daily and intraday charts? What indicators do I put on my daily and intraday charts? I know we haven't covered this one in a while, and I know that 90% of you know this by now, so it'll be very fast. On my daily charts, I have the 8-day EMA, the 15-day EMA, the 50-day MA, the 100-day MA, and the 200-day MA. Thank you, Sean. You might want to post that for everybody so everybody could see it, not just me and Raleigh. Okay? He does, Richard. I agree with you. He does. So again, the 8-day EMA, the 15-day EMA, the 50-day MA, the 100-day MA, and the 200-day MA, the American flag. Okay, so you can't have the American flag if you have a white background because I use white. I know, Lucas. That's why I'm answering your question. Where do you think I got the idea from? Now,
from the mailbag.
That's from the mailbag. Yep. I actually hi, Lucas. I'm a real person. I actually do respond to your emails. And if you check your inbox, you'll see that I've already responded to your email. All right. People are funny. They just don't believe me. They must think I'm a robot or something. So we haven't got there yet, Dean, but yeah, standard settings out of the box. Folks, do me a favor. If you're going to ask me questions, which I don't mind answering right now, can you please post your question to everybody so that everybody sees your question so that when I answer your question, people will know what the heck I'm talking about. Thank you. So the only other thing I put here is and you could eyeball it if you want to. I use a formula that takes the 8-day EMA and it takes the average 10-day ATR, multiplies it by 150%, adds it to the 8-day EMA, and subtracts it from the 8-day EMA. These are not Bollinger Bands, Rod. Again, I take the 10-day ATR, I multiply it by 150%, and I add it to the 8-day EMA, and I subtract it to the 8-day EMA. No, I'm not doing a modified Keltner channel or a Bollinger Band. I tried Keltner channel. The equations are different. Exactly. 1.5 ATR, 150%. Just multiply this by, or multiply by 1.5 or 150%, and then add it to here and subtract it from here.
It's actually pretty clever what you've done there, Roger, because the 8-day is so important to you, and then figuring out what's an effective range to determine whether something's overextended. Why not look at the ATR and then plot it?
Yeah. It's good. And guess what? It's very similar to the Keltner channel, which I don't use. But when Matt tried to apply the Keltner channel, it gave us a different. They didn't line up, and I like this. I like it the way I have it. So I'm going to keep using it exactly. The only other thing I would say that I'm going to add here in the future, I'm going to add. You see how I'm going to add a 200 and Omar and Richie. The other thing I'm going to add is I'm going to add another one that's at 2 ATR. Same thing, 1.5 ATR, and then I'm going to add another one 2 ATR Those are really good profit targets for high flyers. So you see, we were talking about what the SPY will do next and whether it's going to go up to the VWAP, and Matt was going to take a long here if it happened after lunchtime, but we're coming back down. So no soup for us, literally. By the way, today's the first day that I went to work, folks, that I did not eat at the Loop in 6 years. That's right.
You going through withdrawals?
I am going through withdrawals. But I found that the place downstairs isn't bad. Yeah. Yeah, we're coming down pretty fast. Let's see if, like Richard says, the night is not yet, the day's still young. Let's see if we come down. If we come down right here or right here, which is right there, we hit the 8 day. You could see it right here. When I highlight my candle right here, I mean my cursor, you could see it right there. Okay. Okay, now let's move on to the intraday charts. Intraday charts. By the way, I want to ask you an interesting question. I drew this for you guys today. Look at how well it hit this level right there. Actually, that we drew that level beforehand. Right here and right here, and then came right back to this level and then came back down, specifically to this level right here, but didn't go and came back down. Okay, so let me just erase all this crap, okay? Let me erase all this. Okay. The intraday chart, this is a 5-minute chart. It's a 5-minute chart. And all I have here is the VWAP, just a regular VWAP. A regular VWAP. Nothing else but a VWAP. And I have the 8-period EMA and the 15-period EMA. Okay? That's it. That's all I have here. I don't have anything else here. Nothing else. Nice and clean. Everything else I have the Alpha Zone Pro for. Okay? Every program has ATR. ATR is right here. 1.5 ATR. Here's the formula I highlighted for you. There it is. You could see it. I'm not hiding the ball on anything. Omar says problems with Thinkorswim. I had problems with Thinkorswim yesterday, not today. Today, everything seems fine. But it might have been my computer. It was my laptop at home. Okay. All right, let's continue. Let's continue. So the next question. So now you know what I have on my charts, okay? And this is just volume, and this is the 50-day moving average, 50-bar moving average, and 50-bar moving average, 50-day moving average. And I have the ATR here, 10-day ATR. And this is HA. Now, currently I have it at 5 days because I'm using this for 5 days, which is great. 5 period, and this is 5 period, not 5 days. I don't really like HA clouds on dailies, so they're not really that useful for me. So I'm just kind of putting this over here. If I don't use something for a year, I try to take it off my, like clothes. If you don't wear something for a year, you wanna take it off your, get rid of it. Okay, next question. Explain the mechanics of time spreads. Okay, so I'm going to explain this to you guys. A time spread, a lot of people have been getting into time spreads. A time spread is where we sell an option right before earnings come out on that option, where the implied volatility is like 100, 150%. And then we use that money from the option that we sell to finance and buy an option that expires next week. Time spreads are really good Monday through Thursdays. I'm not big on putting them on Friday, but I prefer putting them Monday through Thursdays so that we don't have that over the weekend decay. And that's when you have expiration. So Tuesdays through Thursdays are like a sweet spot for time spreads. Now, I've explained to you already several times what I look for and the criteria that I look for, and Data Miner has it already built in. But what a lot of you seem to have a problem with is understanding how to exit a time spread. You see, if a time spread goes against you, even where it goes your way, but it's in the money, when the time spread goes in the money, you're going to get exercised on Friday. You understand? You don't have to panic because all you have to do is exercise your long position, and they will cancel each other out. Okay. Real simple stuff. They will cancel each other out. And then you'll be left with the debit that you paid. That's your max loss. Don't try to be creative and get get it exercised and then use your short, and don't do that. It's going to become a mess. Just press the auto exercise button on your Thinkorswim, exercise your position, and the long and the shorts will cancel each other out. Okay? But that's how you get rid of a loser. If you can't close a time spread, and for some reason exiting the time spread would be like, I got an email, Roger, the time spread, I'm a 200% loser now. Do I just close it? I'm like, no, exercise the option. Why would you take a 200% loser? Your loss on a time spread, the maximum loss you should be taking on a time spread is what you put into it when you bought it. You don't need to increase the loss. So the only way to do that is just to exercise that. I got exercised and received a margin call. Well, Marie, when you receive a margin call, you have to take your finger and exercise your long, and then the long cancels your short, and then your margin call goes away. Of course, you're going to have a margin call. You bought 10 contracts or 5 contracts or 3, and now you have 3, 5, 600, 1,000 shares of a mega cap. Yeah, but your broker knows that you have a long, and he knows that, so he doesn't care. You see, if you bought a stock, if you did a time spread on a stock that's $100 and the stock opened to 200 the next morning, your account would show that you've lost probably gazillions of dollars. But we know better because we have a long. So we auto exercise our long, and your long cancels the short because you're selling and buying at the same strike price, you see. Just so you know, and your long has extra 5 days. So in case you fall asleep at the wheel, you've got 5 days to exercise your long. Okay. If they don't have automatic exercise, Marie, hey, TradeStation, I want you to exercise my long. Okay, thank you. That's called exercising your long. Are we good? You can close the spread only if you're not at a debit above what you paid. Remember, the point is to have a limited loss on these babies. Okay, good. I'm glad you're fine. Yeah, so you just told them to exercise you, and that's it. And then your margin call goes away. No, it's not better to wait. The best thing to do is to so the best thing to do is take profit on a time spread before the earnings came out. Yeah, of course, Bob. Okay. So I just want to make sure you guys understand how these things work and the dynamics of these positions, because they're great positions, but your account is going to lie to you and tell you, wait a minute, you're long, or you're no, that's not how it works. Look, you sold the 100, you bought the 100 strike. Everything you're doing is you're buying the strike price that you sold that expires a week later. So you've got 5 days with the exact same opposite side of your transaction. You understand? Matthew says, terrifying to get assigned on 50 contracts, but the time spread was a wash. Fidelity does not charge for exercise, so it worked out. Yeah, it always works out because you have the long, you understand? This is not like an art. This is a science. You did a time spread, you short, long, the same strike price. So if your short gets exercised, all you got to do is exercise your long. If your debit on the spread, if you can't close out your spread, you understand? That's it. So you're close the time spread before earnings. John, I said the ideal situation. This is a perfect example of. I said the perfect situation is to close your time spread with a profit before earnings comes out. That's the ideal situation. That happens about 50% of the time to us. The second ideal situation is to wait till after earnings comes out. You take a bigger risk of not making more than 25, 30%, but then you can make 100, 2, 3, 4, 500%. It's called the odds. Upside, downside, and only you can tell yourself which way you want to go. Do you take 25% sure thing, or do you risk it all for 150%? It's your call. But if I could take, like Laura did, she took 300% on Gilead. You see what I mean? But I'd like to be in a position where I like to decide if I want to take 25% profit or 300% profit instead of thinking about how I'm going to lose my bank account because I'm about to have a margin call. So both of my scenarios are pretty good. Would you agree, Raleigh? Do I
Yeah,
want to take
absolutely.
25? Do I want to take 25 now, or do I want to ride and make 150, 300%?
Hmm. And the other thought that just crosses my mind, and just trying to give some advice to people, is if you're doing this for the first time, why in the hell would you be doing it with real money?
Thank you.
I mean, if yeah, I
Thank
mean,
you.
seriously, oh, do
Thank
it in
you.
a simulated trader. If you're having difficulties getting out, practice. My gosh.
And by the way, here's the and just to add to what Raleigh's saying, remember the time spread. We do the same thing every time. We find two criterias.
Right.
We sell the one expiring this week. We buy the one. So once you do it one time, then you will know how to do it forever because
Yep.
it's the same spread every week, right? It's not like we're doing something different anytime,
Right.
right? So you do it once on paper, you do one contract with real money, and then you don't have to ask me these questions.
Yeah. And I know I'll just go ahead and post this, Roger. This is what you gave everybody yesterday, because I know you wanted to talk a little bit about guild, but this is what you posted basically yesterday. It was the guild time spread, and several people have already commented on how well they did with this.
Yep.
But
Yep.
that's essentially what you did. It was buy a 120 strike call with an expiration today. This was yesterday.
No,
And then to buy the
not buy, sell,
sell,
sell.
yes, excuse me, and then buy the 120 call 1 week later, which would be a week from today, 11:07.
Yeah, exactly. We've made money on every time spread.
Oh yeah,
I think
Armin
I've
just
made
made
money.
40%. Somebody just
Yeah.
posted that they made 300%.
Yeah,
You know,
because they held it till today instead of, or
yeah,
held it later today because
after
remember, they
earnings.
didn't get,
Yep,
yeah,
yep.
yeah. Maybe, maybe not. Would you give us another one today? I've been giving them every day, but this week, I think, in the pit, haven't I? I think I've been giving one almost every day this week. Okay. Yeah, I've been pretty active on these babies. Yeah, and they're really easy to understand, but you got to walk through them once or twice. And
Yep.
I'll do that next few days. All right. Let me answer the next question. When is a stock overextended for swing trading versus day trading? This is a really good question. Okay,
Yep.
people are getting confused here. Let me explain to you why people are getting confused here. So sometimes I'll give you a stock that looks like this, right? And then I'll be like, well, don't swing trade this stock. And then sometimes I'll give you I'll explain. Versus a stock that looks like this or like that. So Rabaya made 100% on the Guild time spread. You're welcome. Sean says I opened it at 35, closed it at 140. So Sean, you made about what, 300, 250, 300%? You see, Raleigh, people are
Hmm.
loving these time spreads.
Hmm.
Let me ask you guys a question. Have you ever seen anyone do time spreads the way I do time spreads before I taught you how to do time spreads?
Mm-mm.
Okay.
Overwhelmingly no, Roger. As a
Right.
matter of fact, the cool thing was this: most people were basically like, "It's earnings, forget about it. I don't know what to do. I'm going to stay away," which is a good thing to do if you don't know what you're doing. And you just basically introduced an interesting way, a fascinating way to actually trade earnings.
Exactly. And by the way, after people trade earnings this way, they never trade earnings any other way.
Why would you?
Yeah.
Too risky.
No, no, no. The way I'm not talking about time spreads. Of course, people know calendar spreads. They've been around since the beginning of time. I'm talking about the way I trade time spreads on earnings. That's what I'm talking about. I mean, there's only 600 people here. Don't all talk at once. That's why I put it into data miner. And our win rate on time spreads has been about 90, 95%. And I don't think we've had a winner less than 20, 30%. Just
And
saying.
and that's a key aspect what
Yeah.
data miner reveals to you,
Data
Roger,
miner.
as you're evaluating something and you're going like, okay, What's the success rate over time?
Data miner, my friends, data miner. Okay. Yes, using data miner really helps me decide worth every penny. That's right. That's right. Okay, let's continue. So let's talk about this for a second. So I want to show you guys something. So getting back to our example for solar, you see this stock right here? The stock is getting overextended. It's getting overextended. It would be overextended if this was up here entirely outside.
Mhm.
Um, oh, look at that. Don't look at that. Look at this, Raleigh.
Yeah.
220% on the Guild Halloween
Halloween
candy, huh?
candy. Yeah, I'll
Yeah,
post that. Yeah.
I see
Yep.
you guys did really well. Hey, Bob, don't complain. Don't complain. I'm just giving Bob a hard time. Hey, Flo. All right. And it looks like we're getting closer to that 8-day EMA, by the way. Okay. All right. So let me show you a trick. If you see a stock penetrating this area, moving like this, hard and fast with a lot of volume like this, that's a good day trading candidate. Now, you still don't want to chase it. You want to wait for it to hit the VWAP first. But that's a good stock to day trade. If this stock was here, it would be a good stock to swing trade. Why? I don't want to swing trade stocks that are too far away from the 8-day EMA. But day trading stocks like this is like a rocket right now.
Mhm.
You understand?
You're playing the momentum. Yep.
Yeah. So there's a distinction. There's a distinction. And I know I didn't explain that to you. I just assumed you guys understood that. But you want to swing trade. You want to swing trade stocks that look more like this, that are just coming up the 8-day EMA. But you want to day trade stocks that are exploding because they give you the biggest edge. That's why sometimes you see me trading stocks like this or giving you stocks like this on my watch list. And sometimes you see me giving you A-line stocks that are just coming up. It just depends on what I am it just depends on what I'm looking for in that stock. Okay. And if I am day trading a stock, volume is going to become very important. I want high volume. If I'm swing trading a stock, I don't give a shit about the volume. I really don't. Okay. I'm just being honest with you, especially on S&P 500 stocks. Okay.
Mhm.
So, 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 I think I'm going to leave the other questions on till Monday. We have a couple of other questions, but I think we did a really good part. I think we did a really good job covering this. And you and I, is Blake here, by the way?
Yes, he is. We
You
have
know what? I don't.
Blake.
Oh yeah, he is. He is here. Yeah. See, I'm just my mom. I'm just again. I'm just getting into this new. So Raleigh and I did a class about a week and a half ago, and it was a fantastic class. People really, really loved it. So we're going to do this again for you guys. Why? Because, oops. Why? Because we got too much demand for it, and too many people asked for it. So I am going to unshare my screen right now. Second.
I am here. I just finished up a another webinar I was on, so I'm ready to go.
Yeah,
Look
we're
at you.
glad to
You're
have you here with us, Blake. Yep.
yeah. Yeah, it's great to have you here. Let me
That's impressive right there. That
it is impressive. You're right.
looks like my equity curve.
I like that. I like that. Oh, here it is. I found what I
Just
was looking
kidding.
for.
Just kidding.
I found what I was looking for. Okay, let me put this. Let me stop the share here. Let me now put this here. And again, folks, this is my first time in the new office. So please, 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 please bear with me, okay? Share this. I'm going to do this. I'm going to do that. Oh, wrong screen. Wrong screen. Wrong screen. Okay, let's try this again. Events, point of.
And guys, as we go through this presentation, one of the reasons why we're so glad Blake is here is that Roger and I are basically not going to be looking at the chat so that we can get through the presentation. But Blake will answer any questions that you've got, during the presentation. And at the end of the presentation, Roger and I will be glad to answer any questions that you have.
Absolutely.
All right, we're almost ready.
Looking
Can you
good.
guys see my slide deck?
Yes, we do. We see you, the new development, the red
All
eye.
right. All right, perfect. Raleigh, let's begin.
All
Shall
right,
we,
buddy.
folks? And folks, if you have questions, Blake will answer them. Otherwise, Raleigh and I, as he just said, will come back and we'll answer all of these questions, okay? And again, thank you for bearing with me today. And happy Halloween. I know it's a little hectic, but Matt and I, it's our first day working in our new office. Are we doing okay, Raleigh? We seem to be doing all right?
Absolutely. I think everything's working great, and I appreciate from your standpoint, you're just getting used to the layout and the array and things of that nature, but you're doing great, and Matt's doing well as well.
All right, and I'm glad I don't have these lights on me. I don't think I told you, but the ceiling is lower here, so I don't have to use these big old lights, so it's not as hot.
All right, good.
That makes it a lot. He already got lunch. We already had it. There's a restaurant right below us, literally below.
Down the elevator.
Down the
Oh my
elevator.
God.
Yeah,
There
it's
you
called
go.
Pussers, and then we have a steakhouse next door. But I'm not a big. I don't like the steaks here. I don't like Ruth Chris. They put too much butter on their steaks. All right. On that note, let's begin.
All right, folks. So we develop tools and strategies to the best of our ability, but no one can guarantee the future. There's always a risk of loss when trading. Now, past performance is not indicative of future results. And what you're going to see today are some of the best examples over the last few months across all of the publicly traded research service that Roger provides. There were bigger winners, there were smaller winners, and of course, we had losers. Trade at your own risk and see the terms of the Trading Pub homepage for more information. And also, folks, we've got to be real. You know this. We know that there's going to be losers in trading. That's just the way it rolls. There is no black box miracle system that prints out winning trades automatically. And Lord knows we've tried to find one, but it doesn't exist. The whole purpose of our research and work with traders is to help give you an edge in the markets. And if you can't handle a losing trade, then you really shouldn't be trading with real money at this point. Once again, losses in trading have occurred and they will occur in the future. So for those of you that don't know me, my name is Raleigh White. I'm the senior moderator and trade show host, and this is me looking extremely fresh, getting ready for a gig tonight. That's what I look like.
He looks great, doesn't he, folks? Raleigh, are you still doing so? If I come out to Austin, I could see you play in your band.
Yeah, we play about 6 nights a month. And I'm a drummer. I am a rock drummer.
Yeah.
So
Yeah, right. I love it.
anyway, today Roger and I are going to tackle some of the most important questions in all of finance. Questions that can make or break an account. And this is the last time our publisher is allowing us to do this live for some time.
Yes, this is true that this is the last time.
Yeah. So please